Hello and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth, and I am delighted to be joined by Tom Hibbert from our Chief Investment Office. Morning.
Morning. Thank you, Jane. Thanks for having me back.
You're very welcome. So, as you know, each week on our podcast, we try to cut through all the noise, demystify what's going on in a simple and easy to understand manner, and then hopefully you can feel a bit more informed, a bit more confident, and more in control of your financial future. Now, this week, Tom, we are having a little change of tone, and we are taking inspiration from your daughter's bedtime book, and you're quoting Dr. Seuss at us. And why it is an apt parable for the markets since the conflict in the Middle East began 6 weeks ago. But before we get into that, we have been talking about what's been going on over there for, it feels like longer than 6 weeks here on the podcast. But there's been a lot of volatility, a lot of headline-driven markets. And we're now asking, really, are there any genuine reasons for us to feel a little bit more optimistic, a little bit more cheerful, or is this just another false dawn? So, welcome, and let's dive into...
Kick off with some Dr. Seuss.
Let's do that. Yeah, this week's coffee break. Let's go with that.
It's a good comparison, I think. And reading any Dr. Seuss is chaos.
Right, especially in your household.
His writing style is chaos, and especially in my... Yeah, exactly. With
two daughters.
It's total chaos. But there was one quote, 'cause my daughter's new favourite book is If I Ran the Circus.
Right.
Is it my daughter's favourite? Maybe it's my favourite.
Yeah.
It's definitely my favourite children's book.
That's more like
great.
it, yeah.
But there's the Zuma Zoop troupe. It's a trapeze act in If I Ran the Circus, and it's completely chaotic. And to quote Dr. Seuss, no one knows who will catch which by the what and just where, or just when and just how in which part of the air.
Nice.
And I think that's quite comparable for how markets have been behaving in the last few weeks since the conflict began. There have been sharp rotations.
Yeah.
And
rotations, reminders?
Oh, they're up hugely one day and the next day they're down again. They've largely followed. The best indicator has been President Trump's Truth Social account.
Yeah.
The markets have been passengers to Newsflow and passengers to Trump's Truth Social.
Definitely a high wire trapeze act going on in the markets. Yeah.
Absolutely.
So lots of movement, very little certainty, and no one's quite sure who's catching what. Very uncomfortable for investors really all round. Anything to cheer us a little bit then?
Yeah, sure. I suppose there are reasons there are obviously reasons to be cautious, and there's a lot of uncertainty out there. But a good way of, I think, approaching these periods of uncertainty is to try and look through the fog.
Right.
And look at what the fundamentals are telling you.
Yeah.
And if we look at the fundamentals, those are the things that tend to prevail over the long term. And actually, there are quite a few reasons to be optimistic.
Okay.
Looking at those fundamentals, whether that's earnings growth, broader strength in the underlying economic data. We had a little bit of that last week that kind of shone through the volatility and uncertainty of what's happening from a geomacro perspective.
So what's going on then with equities and bonds in the last week then that's cheered you a little?
Yeah, okay. So maybe just to start, I'll say there's been an interesting pattern that's started to emerge in markets, a weekly cycle almost, where markets have started a week quite strong. Yeah. And then towards the end of the week, they've taken all the risk off because a lot of the geopolitical events, the strikes, the military strikes that have happened, have tended to happen over the weekend.
Okay.
So investors haven't wanted to carry risk into the weekend. And last week, this cycle was quite significantly broken. Also, markets were just positive.
Yeah.
So the global equity market rose 3.6% in sterling terms last week. Every sector was in positive territory. There was more optimism in general about a possibility for a ceasefire in the short term. And equities and bonds reacted positively to that. But there was also some positive news in terms of what analysts are expecting from companies as we head towards earnings season and in some of the economic data that was reported last week.
And was this positivity across all equities, all sectors, all regions, or did some outperform even more?
The parts of the market that have been most sensitive to the conflict moved the most.
Okay, upwards.
Upwards. So materials, real estate, and also some of the areas that have been particularly weak as well. So communication services, technology, and in the bond market, things like UK gilts, government bonds. We've spoken a lot about that. So we saw yields fall quite sharply last week.
So some optimism that both equities and bonds, both areas of the market, rallied last week, and not being confined to one particular corner of the market, which is a bit more cheering, and some optimism coming out of the Middle East. So let's just go back to, you mentioned the underlying fundamentals and about that being another reason for us to be optimistic. So what's playing out there? What's going on in the economic backdrop?
Yeah, a few things to note. First is that there were the S&P Global Manufacturing Surveys reported, and that showed that manufacturing activity has actually continued to expand despite the conflict.
And that's globally.
That's globally.
Yeah.
And it's all split out across regions, but we generally saw sort of an uptick in manufacturing activity pretty much across the globe. So that's a positive. Then you've got some economic data out of the US. We saw a particularly robust US labour market report, 178,000 new jobs created in March. That's the biggest increase since 2024.
Okay.
I need to caveat that a little bit because it's a noisy data set, and it's a data set that's set within a broader trend of sort of cooling for the labour market. So there's still some broader negative momentum in the labour market.
They quite often restate those labour market figures in subsequent months,
and they've been doing that a lot.
Yeah.
And in this report, they also restated the previous numbers. But still, it was a much stronger report in aggregate than expected, just set within a sort of negative or trend of cooling for the labour market. And then from a corporate perspective, I've already mentioned it, but we're seeing profit margins continue to edge higher in terms of what analysts are seeing from the companies they cover. And that's going to be a key focus, I think, as we head into this quarter's earnings season. I think that the recent improvement in those profit margin expectations has come largely from higher oil price, and it's been driven by the energy sector. But even if we strip that out, we're seeing it across the broader market as well. So there are a lot of reasons to be optimistic, because if markets continue to stay supported from a fundamental standpoint, from a fundamental perspective, that holds them in better stead amongst a period of broader uncertainty and weakness. It's still early days to say with any certainty what the impact of a potential extended conflict will be for all of those things that I've spoken about, for the global economy in general. Yeah. But from a fundamental standpoint, there are reasons to be positive. Yeah.
Okay, right. We need to balance out this optimism. I don't want us to get carried away. The sun might be shining, but what could change this mood, this sense of optimism that you're talking about?
The biggest thing will be out of the way by the time this podcast is released.
Okay.
So this evening, 8 p.m., which is I think 1 a.m.
UK time.
Wednesday morning UK time. Trump has this self-imposed deadline on Iran to reopen the Strait of Hormuz. Otherwise, they will strike Iranian energy infrastructure and their infrastructure in general. So
that sounds like quite a big cloud.
So obviously, you can't. Although you can be optimistic from a fundamental perspective, we are still amidst a very uncertain and quite terrifying point.
A lot of fog.
There's a lot of fog. Yeah. There's a lot of fog. And Europe is not insulated from this, clearly.
Far from it, yeah.
And far from it. And at the moment, Europe is pursuing this sort of "this is not our war" philosophy, which fundamentally sits in quite stark contrast with economic reality. And that's something that Europe needs to grapple with. At the moment, their focus is really remains on trying to reopen the Strait of Hormuz through diplomatic means rather than anything militarily. But they need to balance that sort of diplomacy with the US's much more militaristic approach. And that's a very difficult balance to strike. As in any diplomatic efforts that they make could annoy the US if they try and sort of offer concessions to Iran or whatever. So all of there's a huge amount to balance and a huge amount of uncertainty. But if you try and look through that uncertainty, there's fundamental strength.
Great. Thank you very much. Well, I think I should briefly sum up what's in my Canaccord takeaway coffee cup today. As we said, reasons to be cheerful, parts 1, 2 and 3. I think there's a song in there somewhere. Part 1.
We'll come back with that next week.
Yeah, next week you can sing it for us. Yeah. Part 1, improved mood music from Iran and hope of a ceasefire. Part 2, business fundamentals, particularly business margins, are remaining resilient. And part 3, the whole economic backdrop continues to hold up. but clouds do remain on our sunny horizon, sadly. The conflict continues. Europe remains exposed to energy risk that we've been talking about over the last few weeks, and particularly energy-led inflation remains a live concern. But as ever, we keep a close watching brief on behalf of our clients, and we'd always say stay invested, stay balanced, but above all, stay awake in these foggy times. So thank you very much. Thank you for your time. I hope you've enjoyed the Canaccord Coffee Break podcast today. And our little bit of optimism amongst all the world doom and gloom. Don't forget to hit follow to never miss an episode on Spotify, Apple, or your podcast channel of choice. And any thoughts, anything you want to ask us, please drop an email to coffeebreak@canaccord.com.
Thank you for your ongoing support, everyone.
Thank you.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.